For times a year, the biggest investors in the world are forced to show their hand. Every fund managing more than $100 million has to file a public document listing what it owns. It is called a 13F, and learning to read it is the closest thing you will get to looking over the shoulder of the institutions. Here is the one-line version. A 13F is a quarterly report to the SEC that lists the U.S. stock positions of large institutional managers. Hedge funds, pension funds, endowments, the household names, all of them file one. It is where you see that a legendary investor added to a position, or that a famous short seller quietly built a stake. So what is actually in it? For each holding, you get the company, the number of shares, and the market value at quarter end. Line that up against the previous quarter, and you get the useful part. The changes. A new position. A doubling. A trim. A full exit. One fund buying is noise. 15 respected funds buying the same name in the same quarter, that is a signal. But here is the catch nobody tells beginners. A 13F is a photograph of the past, not a live feed. Funds have up to 45 days after quarter end to file, so what you read in August reflects where they stood at the end of June. A fast fund may have already sold it. And it only shows long US stock positions. No shorts, no cash, no options, nothing outside the US. You are seeing one side of the book. So how does the desk use it? We do not chase a single famous name. We look for convergence, several credible managers moving the same way on the same stock. And then every one of those names goes through the same ethical and valuation screen as everything else. A stock the smart money loves still gets refused if it fails our principles. The 13F tells you where to look. Your own discipline tells you whether to act. This is education, not advice. Always do your own work, and manage your own risk. If this was useful, subscribe for more like it, and you can find the full desk and its trackers at titanprotect.trade, link below.